All right, guys, back to work. Back to work. Earnings are out and the markets are chopping around in some nasty trading ranges right now. Now, of course, that makes someone like me happy because I love range-bound markets. And you will too, by the way, too, because once you have the right strategy, range trades, range reversals are very easy to make money with. I have 4 range trades, range setups after earnings I'm tracking for tomorrow. I'm going to cover my favorite entries in this video tonight. I want everyone to have an easy roadmap to make some money as well on Wednesday morning. Before we jump in though, and to my favorite trades for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me, will ya? And as always, give me a shout out, give me a heck yeah in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro though. Where are the money making trades on what should be another fantastic day tomorrow in our trade room? Boy, charts are all ready. NASDAQ triple Qs are all ready. The E-mini and the SPY is ready. I have 2 very simple but very important clues on these charts right now that are telling us where the money is made tomorrow morning. The first clue is right here on these 60-minute time frames. You know, we've been bullish the last few months, right? Up and up and up. All the S&P and NASDAQ did the last few weeks was go up, up, up. Well, of course, we had that strong correction last week, and that strong correction is going to want to retest that low before we resume that overall bull trend. So NASDAQ triple Qs, S&P and SPY, very bullish overall, but strong run down last week. Those bears, they want to retest that low, and I would love to buy me some double bottom reversals, possibly tomorrow or later on in the week. But look closely, though, at what's happening right now. We're kind of grinding our way higher. And of course, as we start grinding our way higher, we know one thing's for sure. The bears will try to retest that low, but I'll bet there's a lot of buyers who are hanging out right below all of these little swings right here. So certainly looking for levels off the 87, 72. We'll talk about this more as we go here. But again, NASDAQ, triple Qs, right? Same thing. Again, they want to retest that low, but as it climbs higher, I'm looking for entries below these prior lows here, bear trap entries, and run back up again. So a very important clue, first of all, on the 60-minute, I want to buy below prior swings and, of course, try to get into this thing before it resumes that overall bull market. Now, I have one more important clue. In fact, even more important on some faster time frames, because, you know, I like to use these 60-minute time frames to give us the bigger picture, but these hourly charts, they're not going to help us time the entries. The tick charts, and I got one more important clue, will put this all together and make timing the perfect range reversal, kind of earnings reversal entries for us here for tomorrow. Now, before we jump in, though, and talk about entry tactics for tomorrow on that faster time frame, be aware tomorrow we've got some big news coming out at 9:45 Eastern time. That PMI composite flash, that is certainly on my radar for tomorrow. We don't have any major earnings. We heard from Tesla and Google this afternoon. I know there are some big names tomorrow, the rest of the week here, but yeah, these are not going to be big enough. We got more of the Mag 7 stocks. We got the Microsofts, the Amazons, of course. We got the Apples, and you know the crew. They're coming out next week, and so PMI composite flash tomorrow morning, 9:45. Keep that on your radar. And again, we'll keep in touch on earnings as we go deeper into earnings season. Now, back to our charts, though, because it's good to know when that news is tomorrow morning. But if there's one thing you learn from me, right, we make our money trading off of charts. So let's go make some money on what should be a great Wednesday morning. I mentioned earlier, bullish the last few months, deep pullback. The bears want to go in and retest that low. I love that double bottom reversal idea. I also love getting underneath these prior swings. But how do we time the entry though, right? How do we time an entry on this? Good question. This is where tick charts come in handy. This, by the way, is a 7,000 tick chart, upper left-hand corner, all of the time frames there. And if you're watching for the first time right now, what took you so long? I'm just kidding with you. That indicator right there, it's good to have you here, by the way, for the first time today. That indicator right there is the 21 EMA. It's the only indicator we use to find lots of winning trades each week. Now, there's one really big clue on these tick charts. And again, tick charts, They make pattern recognition a lot easier. I trade with patterns in our trade room, and so I like to use tick charts. We are bullish right now on the faster time frame, bullish right now into a trading range. Now, if you recall, back on that 60-minute chart, we talked about levels like 87, we talked about levels like 72, we talked about levels like 42, right? All of those prior swings we saw on the 60-minute time frame. So really one of my favorite trades here. I would love to get this thing trying to go lower, and I would love to use one of those failure into trap combinations we love so much in our free video course, right? So a failure pattern. I'm not gonna, I wanna buy down here, right? Again, below these swings, but you know me, right? I'm not gonna blindly buy down here. I don't have a crystal ball. What I'll do is I'm gonna wait for the price to pull back to that 21 EMA. I'm gonna let the bears try once, try twice here. Kind of like back over here, right? Kind of back over there. Now, why twice? Because then I know they're trapped in, right? Now I have their stops I can use now, and I can light those stops up. If you're caught short and you get stopped out, you got to buy your way out, right? These are situations that can be very explosive, right? Again, we call these failure patterns, by the way, if you guys are in the free video classes right now. Now, that failure pattern, remember, ranges love to rotate, right? Ranges love to rotate. The amount above, the amount below, the amount below, the amount above. So we expect this range now will want to rotate back higher again. And as it does that, watch closely here. This is where I love to get what I would call a classic bear trap pattern. Now, bear trap patterns are very simple. Remember, the 21 EMA is a big part of a bear trap. As we pop higher, look for separation off the moving average, a higher high in price, and what you want is, I want to get right below that prior swing, a nice strong, in this case, green candle closing above that 21 EMA. These are technical bear trap patterns. I call this a failure into a trap combination. And remember, we know that ranges mark that move down, mark that move up. I'll probably take some profit off right at the top of that move up there, but leave that runner up into that pendulum swing. We talk a lot about ranges, how they love to rotate in our free video series, right? So hopefully that rings a bell there. I love the idea, again, of getting underneath these areas. Now, let's face it, we just had a big earnings report come out here. So we may see a relatively strong shot down, and keep an eye on this because this can be even more lucrative of a setup. I would love to get that same thing, right? That same failure off these lows here again, because I don't know how far it will go, right? All I know is if we get that strong run down here and I can trap those bears in, what happens a lot of times is whenever we see a strong run like that, it'll pop up for us. We're going to get a winning trade out of that. We'll get a 1-to-1. We'll move that stop up. But because that move down is so strong, oftentimes what was support becomes resistance. And the bears will come in and make another leg going lower, okay? These oftentimes create measured move, by the way. One leg and two leg, right? Back down again. The bottom line is, guys, anybody who sells short on that breakout pullback off that trading range, they're taking the bulk of their profit off at the retest of that low. The way I think of this is that the sellers here become buyers down here. Okay, I call these double bottom retest. These are oftentimes the most lucrative variations of this because now these are rookies down here. Professionals are not going to sell down here, not all the way down on the 60-minute time frame. So again, we're not going to pick the bottom on this. Let's trap the bears in. One try for the bears. Two try for the bears. Remember, higher high, right? Higher high. Why higher high? Because as the market goes higher, as they go higher, more bears enter the market. Sellers want to sell high. So I want to see one try, higher high, two tries. Now, as we say in our trade room, now we got you, right? Now you're stuck. Now you're trapped. And now I can use their stops to fuel that move. And again, the failure pattern will oftentimes squeeze those stops. And again, watch for that separation off the moving average. And as they start ripping higher, that separation off the moving average, right? That higher high in price. And then, man, oh man, this is oftentimes this is oftentimes one of the easiest winning trades right there, because now momentum now is turned for the buyers. That range above us is the magnet. We're underneath these big swings on the 60-minute time frame. So again, right, if we get that strong run down, of course, it's a failure pattern. We'll take our profit off at resistance overhead. But if they whack that thing back down again, this is not a reversal. It's a gift from the trading gods, because it's a double bottom retest. It's a failure into trap combination. Man, oh man, I'm getting kind of excited right now, getting goosebumps just kind of thinking about that trade setting up for tomorrow. But let's slow down for a second, because I know that most of you guys and gals watching right now, you know these patterns. You know why I love traps. You know why I love range marks. You're making money with failures, pullback, trap combinations. But if you're here for the first time right now, this might be a brand new language for you. What are ranges? What are failures? How do we run stops to make money? So if you're watching for the first time right now, I teach this entire strategy. I have hundreds of examples of all the entry setups I'm talking about right now. What I'll do is I'll put a link up top here for you. Upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a remarkably simple trick we use in our members trade room, so we always know where the winning trades are waiting for us every day, where to find those trades. Then most importantly, I want to help you start making money on your own. I want to teach you 4 my favorite entry patterns, failures, traps. I cover the whole entire roadmap, start to finish. It's all in that link that popped up there, upper right-hand corner. Guys, if you're not making consistent money right now, if you're missing the best trades each day, the markets are way too good right now, hit that link up top there, take that free course. It's perfect for someone who is serious about making money in these wild markets. Also, too, be aware too, I'm going to put all the important links tonight in the description of the YouTube video. The free class links will be down there. Also, too, don't forget, we trade together every day in our trade room, 8 o'clock Eastern time. Come join us. The membership links will be down there for you, the description as well. And 2, don't forget too, I post a lot of updates on Twitter or X, videos, charts, mindset stuff. If you're on Twitter, X, give me a follow. Again, all the details you'll need in the description of that YouTube video. But again, promise me, take that free video course first, because that's the roadmap we use. That'll help you start making money on your own, and the rest of this will get a whole lot easier. So that is one of my favorite trades, right? Running down, trapping those bears in, squeezing those stops back up again. But you know what? Let's face it. I love the idea of, again, bear traps. But you know what? Sometimes we don't get those bear traps down there. Sometimes there's so many buyers down here. The market goes lower. We don't get the signal, and it's just whoop right back up again and just runs right back up into that trading range. These can be frustrating, but here's how I like to trade them. If we run lower and begin to V bottom off that low, keep an eye out for this simple pattern. It'll almost always begin to grind going higher. Now, this grinder can be difficult on the emotions, because if you're anything like I am, when it starts to grind up like that, I am itching to get into something, because I don't want to miss that rotation back up into that trading range. But I'll tell you right now, remember, as traders, we get paid to wait, and your patience be rewarded on these, because watch closely. I'm gonna draw a trend line off the high. I'm gonna bring that trend line down around that low. That creates a channel. What I want is, I wanna buy the first test of that channel. And to do that, one of my favorite trades is to find prior swings, because that's where traps live. Right? Like bear trap patterns, right? A lot of examples of those in the free video course. Now, sometimes we don't have a prior swing right there. Sometimes all we get is below the 21 EMA. When I get below the 21 EMA, right? Like over here, right? I trap the bears in, let them try once, twice, squeeze those stops, right? Squeeze those stops and run higher. Guys, this could be either, again, trap pattern, failure pattern, a pullback combination. Again, this will make a lot more sense once you guys are getting through the free video course and learning all the entry setups. But guys, again, I love the idea of, as we go lower down here, again, I'm not gonna pick the bottom down here, we're gonna blindly buy it, but let them run lower, trap those bears in and squeeze those stops. Keep an eye out for that double bottom I mentioned, keep an eye out for that V bottom reversal I mentioned earlier, and of course tomorrow, we'll do this tomorrow morning together in a trade room as well. Now, the big question now is with this trading range, what happens if we go higher? right? If we go high, I'll tell you right now, if we go higher, we've had a lot of bears up here. Remember, on the 60-minute time frame right now, you got to think, as we go higher, there could be more bears to whack that thing right back down again. So I don't want to buy a breakout up here. There could be easy ways to sell off that high, and if we're successful, potentially buying that breakout. How do you know when to buy a breakout or when to sell a breakout back into that range? Because again, those ranges act like magnets. Let's go to the NASDAQ right now. NASDAQ gets a bit lonely over here if we leave them hanging out here too long. I'm with you here, buddy. Here we go. NASDAQ on the 60-minute time frame. Again, I am not debating whether or not we are bearish here over the past week or so. But I'm not going to, come on, right? I'm not blind here. Look at the size of that move, right? Ever since the month of June started up, right? So I get it. We're pretty bearish in the short term, right? But turn off the television. The world's not coming to an end. This is simply that deep correction that we all get every once in a while in these big runaway bull markets. Now, I'm also not blind to the fact that this strong run down, that's a lot of momentum. Momentum is going to want to retest that low. And like I said earlier, I love the idea of buying the double bottom. I also like the idea of buying below these prior swings. We talked about this on the S&P, but let's grab the NASDAQ tick chart. You'll notice right away here a slightly faster time from their 4,000 tick chart. The NASDAQ is less volume than the S&P does. There is that bullish range we have again, and again, there are my swings. And the big swing down there right below us. So same basic idea in the NASDAQ, right? I hope that we get this market running down. Give me a chance to trap those bears in. It's worked so well the last couple days here. Give me a chance to trap those bears in and squeeze those stops up, and we can use that same game plan I mentioned there before on the S&P. The big question though now is, here's the big question we got to answer now. If we go higher, right? If we go higher, because again, right, a lot of bear momentum in the short term here. So if we go higher, now, first of all, how do you know when you can buy a breakout and when to sit on hands? Well, it's all about the 21 EMA. The 21 EMA, like I said earlier, it's kind of the only tool we need to know which ones to take and which ones to skip. For example, I know we have a breakout whenever I pop up, hold the pullback, and jump, right? And jump off that moving average. Now think about it. Every time we've popped up, the buyers have had a chance. They've had a beautiful chance to hold the pullback. They failed right there. They failed right there. They failed right there. They failed right there. So until we can get above that range, pull back to that moving average, again, 21 EMA, and jump off that moving average, that's how we know when we have a breakout. Now, there's one more advanced tactic. Let's talk about that advanced tactic. This one's a little bit more difficult, but I think you guys can handle it. It's all about separation off the moving average. I mentioned earlier that separation off the EMA is a good sign for a trap, right? So we know this ranges want to rotate, right? Ranges want to rotate back and forth. Again, if you're in my free video classes right now, this should all be very much a review for you. You know this stuff if you're in the free video course right now. However, because we're bullish into that trading range, if we end up running higher here and we start to separate off that moving average, this is an easy kind of cheat sheet, right? A cheat, if you will, right? Again, the easy giveaway is up, pull back, and blast. But if we make that run higher and we start seeing pullbacks to that moving average are not pulling back all the way, right? Again, haven't seen any of that yet, right? All the pullbacks are right on top of that moving average. But if I can get that rotation off the low, get that separation, right? It doesn't pull back, right? Again, it'll go like this. Most of the time, they go like that, right? But if they start shallow pullback in here and grinding higher like that, okay, pay attention now. That is your strong run up, your shallow pullback, your higher high in price, and that, my friends, is we call a bear trap signal. We're overall bullish right now. We're bullish here on this faster time frame. This pattern makes a lot of sense in that situation, but we have to get that, again, that separation off the moving average, then a nice strong, in this case, green candle closing above that 21 EMA. That is your trap signal going higher. Now, pay attention here now, because usually what happens is when I get that pop up, I get that separation, and I get that bear trap. When I get that trade going higher, it almost always wants to complete a measured move, right? So remember this. Anytime we see a range breakout, the breakout leg is the measuring leg. Okay. Anytime there's a range breakout, we basically begin a new trend, and the first leg of a new trend is always a measuring leg. Okay. So breakout leg, measuring leg. Okay, that will tell you where to leave some targets. Guys, the easiest way to make more money in trading is get better at leaving a runner, and measured moves are an easy way to do that in a range breakout. Now, once I get that range breakout, now I do not want to buy high, right? We don't want to get in the habit of buying high. This is where things get pretty easy, because now that prior trading range now sets up now for a breakout pullback. Okay, think about this. What was resistance now becomes support on a breakout pullback. Now, breakout pullbacks, they're very easy to understand in theory, right? In theory, they make a lot of sense. How do you time a good entry, though, in a breakout pullback? Very, very simple. When I think breakout pullback, I think about a two-legged pullback. Now, what's a two-legged pullback? Well, obviously, two legs. The trick to this is, though, it's going to be a bit more than a measured move, right? So measured moves are ABCDs, right? They're 100% extensions. I want to go a little bit more than a measured move, right? Now, of course, I can't tell you exactly where it'll be right now, but the goal is to get that thing to pop up, get below the moving average. Key is below the moving average, one leg, two leg, a bit more than a measured move. Hopefully, it'll line up right around those prior resistance levels, which are now going to be an area of support. Now, remember, we're not going to make that rookie mistake and blindly buy that pullback. For all I know, it'll keep on rolling all the way down. And by the way, I do have a game plan for you to make money if that happens. Don't go anywhere. We'll talk about that in a moment. What I'm going to do, though, is I'm going to wait for that pullback to the moving average, right? As we start going lower here, I'm not going to blindly buy into it. I'm going to wait for that pullback, because once those bears come in and try to run it back lower, if I start seeing them once and twice, remember that higher high in price, now we got you, and now we've got that failure into that, what was it called again? It's called a technical trap pattern, a failure into a trap pattern running higher. Now remember, anytime we see these breakouts, this big breakout leg, think about that as a measuring leg, right? And that will give you an objective overhead, easy target, right? Going higher here. So whenever I think of a breakout pullback, again, bull range right now, I think about, first of all, is that slightly more advanced? I know it's a bit more advanced than we usually do in these videos, right? But that bear trap on the way up, separation on the way up. Then we don't buy high up there. We take our profit off at the measured move. We get that 1, 2, again, a bit more than a measured move. We trap those bears in, because, guys, the easiest money you're going to make in trading is trapping traders on the wrong side of momentum. If we're bullish overall, get in the habit of trapping, in this case, sellers below that 21 EMA. It's one of the easiest, most consistent ways to make money as a trader. That's a failure pattern again. Failures love to pop and pull back. Failure to trap pattern, failure into pullback combination. Again, any of the entry patterns you guys are learning in the free video course. And remember, that big leg, right, becomes a measuring leg, and they'll give some ideas on some targets, right? So that's the sequence looking for if we do end up getting this thing to squeeze and run going higher. Now, here's a very important question. You've seen for yourself, right? Every time we've gone higher, the bears are waiting right there to whack that thing right back down again. So how do we trade something like this? Well, we saw a great one today, actually, on the S&P. We talked about this last night on the video. Real quickly here, if you go back to the S&P right now, what happened this afternoon? Had that double top up there. They ran lower and grinds down like that. If you watch these videos, you know this pattern already, right? We draw a trend line off that low, right? Mark up there on that high. What do? We found those prior swings. I got a bunch of emails from you guys this afternoon, members making bank, right, on that, again, a V-top reversal off of that high. We're a very bullish market in the short term right now. So trying to pick that top is going to be very difficult, especially, again, because we're so low right now on the 60-minute chart. So this V-top reversal, by the way, it's the exact same pattern as that V-bottom reversal I mentioned earlier. Remember that V-bottom reversal, right? Looking left. It's the same pattern, right? Same exact pattern. except this one is bearish off those lows, up around that high. Again, look left, find that prior swing, and don't miss that first test off the high of that channel. That was a great one we saw this morning, early afternoon, this afternoon in the trade room. And of course, back in the NASDAQ right now, right? Not as good in the NASDAQ, right? Wasn't as good on the NASDAQ. Most important though, if we run up here right now, I'm not trying to pick the top. I wish I could tell you a safe, consistent way to short in a bullish move like that. Remember, we're bullish in a range right now. So it's difficult to pick a top like that consistently, right? Anybody can get lucky, right? Even a broken clock is right twice a day, right? So it's tough to get lucky every single time like that. What I would do is, now, again, I want to go up. If we see these bears get whacked back down and start grinding down, okay, that's your giveaway. Mark off that low, mark off that high, look left, find some prior swings. And again, you want that bull trap. You want that buyer failure pattern. You want that pullback combination. And by the way, where does the market want to go right now? Well, think about it. It's a range. Okay, what do ranges do? Ranges love to rotate. The amount above the range, the amount below the range, that becomes your target now on the opposite side. And then what do you do down here? You do not sell down here. You do not sell down here, right? What do? You trap the bears in, right? You wait for that price to run lower. You trap those bears in. We execute that same bear trap in a failure combination that we love so much in our trade room. So range market, buy low, sell high, right? Again, be watching for that pop up, that separation, those traps, two-legged pullback I mentioned earlier. All right, guys. Boy, I'm excited for tomorrow. Big earnings are all out behind us now. That is the plan for tomorrow morning in our trade room. Now, speaking of trade room, don't forget tomorrow morning, 8 o'clock Eastern time. Guys, the markets are wild and choppy these days, but the easiest way to start making consistent money in these wild markets is to come out and learn this stuff and trade along with me every morning, 8 o'clock Eastern time in our trade room. I'm going to put all the important links tonight, the free class links, the trade room membership links, Twitter feed, all the good stuff in the description of the YouTube video. I would recommend, if you're here for the first time right now, check out that free video course first. Learn the setups. Most folks start making money on their own with that free video course. So start there, learn the basic roadmap, and hopefully sometime soon I'll see you trading with us in the morning trade room as a member, because that's where the good stuff is every day at the opening bell. All right, guys, hope you learned a bunch in tonight's video. Hope you use this knowledge to make a killing on what should be a fantastic Wednesday trading session. As always, keep in touch, be well out there, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.